This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, March 20th, 2015. Eurodollar. So the market has extended its recovery off those 12-year lows that we saw last week at 104.62, with the gains extending all the way up this week to a high on Wednesday of 110.42 thus far. Thursday's price action, despite the setbacks, was classified as inside day price action, with the market confined to Wednesday's range. At this point, we're going to need to see a break back above Wednesday's high or low for clearer directional insight. But again, with technical studies so extended on the weekly and monthly timeframes, there is risk that after a higher low on Thursday, we continue to see this recovery extend higher before the market looks to resume the underlying downtrend. Any rally should initially find some very solid resistance by previous support at 110.98, while only back above 15.35, the high from the 3rd of February, would compromise the overall bearish outlook. At the same time, if the market breaks and closes back below Thursday's low at 106.13 on Friday, that would put the immediate pressure back on the downside for a retest of those recent 12-year lows below 105 and then towards the 103-104 area further down. Sterling dollar. So cable has been caught consolidating in some choppy price action over the past several sessions, although the overall price action here remains quite bearish. The market will need to break back above the high that we saw on Thursday to encourage further recovery prospects. That high comes in around 150.10, while a break below the recent low at 46.35 would open the door for fresh downside towards the 140 area over the coming weeks. At this point, it's too difficult to determine over a short term which way the market will head, but key resistance and support come in at 51.65 and 46.35 above and below. Dollar yen. So dollar yen retains its overall highly constructive outlook, with setbacks being well supported this week at 119.30. Again, the market should trade higher with the constructive outlook firmly intact, with a break required above 122.03 to open the door for an acceleration of gains towards next key psychological barriers at 125. At this point, only a break back below 119.30 delays, while ultimately any setback should be supported ahead of 118. With this market, a break below 115.55 would be required to negate the constructive outlook and force a shift in the broader structure. Euro Swiss. So Euro Swiss continues to consolidate with the market confined to a range between 104.15 below and 108.15 above. But the recovery off those historic lows that we saw several weeks back continues, and ultimately the market should hold above 104.15 in favor of a fresh upside extension beyond 108.15 and towards the 110-112 area further up. Ultimately, only back below 104.15 negates the current recovery outlook. Aussie dollar. So Aussie has been chopping around over the past several sessions, although the broader downtrend remains firmly intact, and the market should consolidate ahead of what should be the next downside extension below these recent lows that we saw at 75.60 and towards the 70 handle further down. At this point, any rally should be very well capped ahead of 78, while only back above 79.13 would compromise the bearish outlook. Dollar CAD. So dollar CAD, despite breaking to fresh multi-year highs above 128 this week, pulled back after being unable to close above 128 on a daily close basis. Ultimately, the market is favored to eventually break above that high that we saw at 28.35 this week and towards the next key resistance by 30.65, which represents the 2009 peak. Any setbacks should continue to be very well supported ahead of 23.50, while only a break back below 123.50 would compromise the bullish outlook. Kiwi dollar. Kiwi has been chopping around in recent trade, but again, this market remains locked within a well-defined downtrend, and a lower top is now sought out at 76.14 ahead of the next downside extension below 71.76 and towards the 65 area further down. At this point, only back above 76.14 would compromise the bearish outlook. SPX 500. So the S&P 500 was very well supported on dips this week down to 2040, and the market is back to testing, but has recently broken back above 2100 and puts the focus on a retest of the record high that we saw in February at 2120. A break and close above 2120 will do a good job of opening the next upside extension, which exposes a measured move towards 2200 over the medium term. But inability to break back above 2120 followed by a break below 2040 would suggest that the market is more comfortable putting in a top and could accelerate declines. Gold. So gold has had a nice recovery over the past couple of sessions, with the market stalling out just shy of the key critical 2014 base at 1131. The market has rallied thus far up to trade back above 1170 towards 1180, and will need to continue this recovery to encourage the prospect of a more significant base. At this point, a break above the high that we saw on the 2nd of March, which comes in at 1223, would be required to officially alleviate immediate downside pressure. Until then, there is still risk for a retest of the 1131 2014 base.